Welcome back to Pulse of Silver, the channel where we break down the biggest moves, boldest predictions, and hidden truths shaping the silver market. Today's story may sound unbelievable at first, but many investors are starting to ask the same question. What if silver is not heading to $100 or even $500, but eventually toward $10,000 an ounce? That's the shocking idea connected to mining analyst Lobo Tiggre, and while many people immediately laugh at numbers like these, the real story is not about hype. It is about understanding how fragile the global financial system has become, how fast currency values can collapse, and why silver may be entering one of the most important periods in modern history. Over the last few years, silver has slowly moved from being ignored to becoming one of the most talked about assets in the world. Investors are watching massive government debt explode higher, central banks continue printing money, and inflation remains stubborn across many countries. At the same time, industrial demand for silver keeps rising because silver is essential in solar panels, electric vehicles, military technology, AI infrastructure, and advanced electronics. This combination of monetary fear and industrial demand has created a powerful setup that many analysts believe could push silver far beyond traditional price targets. Lobo Tiggre has been one of the analysts warning investors not to underestimate what is happening beneath the surface. He recently explained that violent swings in silver prices should not automatically be seen as the end of the bull market. Instead, he described these pullbacks as normal reactions inside a larger long-term uptrend. According to Tiggre, silver often lags behind gold early in a precious metals cycle, but later it tends to move much faster and much more aggressively. Now, before people start thinking silver will magically jump to $10,000 tomorrow morning, it is important to understand the bigger picture. Extreme price targets usually come from extreme financial conditions. Analysts discussing 4-digit or even 5-digit silver prices are often talking about scenarios where paper currencies lose massive purchasing power. In other words, the number itself may reflect a collapsing dollar rather than silver suddenly becoming rare overnight. But that does not make the story less important. In fact, it may make it even more important. Around the world, trust in fiat currencies is slowly weakening. Governments continue spending trillions they do not have. Debt levels keep climbing higher. Interest payments alone are becoming difficult for some countries to manage. Central banks are trapped because if they raise interest rates too aggressively, they risk crashing economies and financial markets. But if they print more money to support the system, inflation may spiral higher. This dangerous balance is one reason many investors are turning toward hard assets like gold and silver. At the same time, silver faces another problem: supply shortages. New silver discoveries have slowed dramatically over the last decade. Mining costs continue rising, environmental regulations are tightening, and many major silver mines are producing less metal than before. Yet demand keeps accelerating because the world is becoming more dependent on technology that requires silver. Solar energy alone is consuming enormous amounts of physical silver every year. Electric vehicles, batteries, semiconductors, and defense systems are adding even more pressure to the supply chain. This is why some analysts believe the silver market may eventually experience a true supply shock. Unlike gold, silver is heavily consumed in industrial processes. Much of it is not recycled efficiently, meaning once it is used, it can disappear from the market permanently. If industrial demand collides with rising investment demand during a financial crisis, silver prices could move violently higher in ways that surprise almost everyone. And that brings us to the question many investors are now asking: are we approaching the moment where silver finally breaks free from decades of suppression, manipulation claims, and undervaluation? Because according to many long-term bulls, the next few years could completely change how the world views silver forever. One reason silver bulls are becoming more aggressive with their predictions is because history shows that silver can move much faster than most people expect. Unlike stocks or bonds, silver is a relatively small market. That means when serious money starts flowing into it, prices can explode upward in a very short period of time. We saw smaller versions of this in 1980 and again in 2011, when silver surged rapidly and shocked investors around the world. But many analysts now argue that today's environment is even more dangerous for the financial system than those previous periods. Back in 1980, global debt was much lower. In 2011, central banks still had room to raise interest rates and stabilize markets. Today, however, debt levels have become enormous. Governments, corporations, and consumers are all heavily leveraged. That means central banks may eventually have no choice but to keep printing money to prevent economic collapse. This is where the idea of fiscal dominance becomes important. Lobo Tiggre recently explained that massive government spending and ongoing monetary support remain major forces driving precious metals higher. In simple terms, governments need cheap money and easy financial conditions to survive. But keeping money easy for too long can destroy confidence in currencies over time. Many silver investors believe we are entering a period where real assets will outperform paper assets. Stocks can crash. Bonds can lose value from inflation. Cash can slowly lose purchasing power every year. But physical silver cannot be printed by a central bank. This is one reason many people see silver not only as an investment but also as financial protection. Another major factor is the growing disconnect between physical silver and paper silver markets. For years, critics have argued that futures markets and derivatives allow large institutions to influence silver prices artificially. Some investors believe paper contracts create the illusion of huge silver supply even when physical inventories are tightening. While opinions differ on how strong this effect really is, there is no question that physical silver demand has been rising globally. At the same time, central banks around the world are quietly increasing their focus on hard assets. Gold has already benefited from this trend, with central banks buying record amounts in recent years. Lobo Tiggre believes strong central bank demand has helped place a floor under precious metals markets. While central banks mostly buy gold instead of silver, the psychological effect still matters because it signals weakening trust in fiat systems. Now let's talk about the famous $10,000 silver target. Realistically, very few mainstream analysts believe silver reaches that number under normal economic conditions. However, some extreme bulls argue that if currencies enter a severe crisis, the purchasing power of dollars could collapse while hard assets reprice dramatically higher. In that environment, silver may not just rise because of industrial demand. It could rise because people are desperately trying to protect wealth. Think about it this way. If inflation spirals out of control and confidence in financial institutions weakens, investors may rush toward tangible assets all at once. Gold prices could surge. Real estate could jump. Commodities could skyrocket. And silver, because of its smaller market size, could experience even more violent price moves. Some analysts also point to the gold-to-silver ratio. Historically, silver often outperforms gold late in a precious metals bull market. Tiggre himself noted that silver tends to lag first and then more than catches up later in the cycle. If gold continues making strong gains over the next decade, silver could potentially outperform by a significant margin. Still, investors should remember something important. Silver is extremely volatile. It does not move in straight lines. Massive rallies are often followed by brutal corrections. Even bullish analysts warn that 30% to 50% pullbacks are normal during strong bull markets. That volatility is exactly why silver creates both enormous opportunity and enormous risk. Another reason silver may be entering a historic phase is because the world is changing faster than most investors realize. We are moving into an era driven by electrification, artificial intelligence, green energy, military expansion, and advanced manufacturing. Almost every one of these industries depends heavily on silver. Silver is one of the best electrical conductors in the world. That makes it essential for modern technology. Solar panels require silver paste to function efficiently. Electric vehicles use far more silver than traditional cars. Data centers supporting AI systems consume large amounts of silver-based electronics. Military technologies, satellites, medical equipment, and telecommunications also depend on silver's unique properties. What makes this situation dangerous for the market is that supply growth is struggling to keep up. Many silver mines are aging. New discoveries have become more difficult and expensive. In some regions, political instability and environmental regulations are slowing mining projects even further. Meanwhile, global demand continues climbing year after year. This creates a simple but powerful equation. If demand rises faster than supply for a long enough period, prices eventually move higher, sometimes much higher. What makes silver especially interesting is that it plays two roles at the same time. It is both an industrial metal and a monetary metal. During economic growth, industrial demand pushes prices higher. During financial fear, investors buy silver as a store of value. That means silver can benefit from two completely different market forces at once. Lobo Tiggre described this as a win-win setup for silver because industrial demand and monetary demand may rise together. If the global economy weakens, central banks may print more money, helping precious metals. But if governments continue investing heavily in electrification and infrastructure, industrial demand could remain strong too. This is why some investors believe the silver market is structurally tighter than most people understand. Another important factor is investor psychology. For years, silver has disappointed many investors. Prices stayed volatile and often underperformed expectations. That created frustration and skepticism, but sometimes markets move the hardest when most people stop believing in them. In previous cycles, silver remained quiet for long periods before suddenly exploding higher in dramatic fashion. We are already seeing signs of growing public interest again. Retail investors are returning to precious metals discussions. Online communities focused on silver continue growing. More people are questioning the stability of the banking system and national debt levels. And as inflation pressures remain persistent, investors are searching for alternatives to traditional savings. However, Tiggre has repeatedly warned investors not to get carried away emotionally. He believes discipline matters more than hype. He has also emphasized that there is nothing wrong with taking profits during strong rallies. This is an important lesson because emotional investing often leads people to buy near market tops and panic during corrections. One mistake many new investors make is assuming silver only goes up during bullish periods. In reality, silver can be brutally volatile. Sharp sell-offs are common. Fear spreads quickly. Headlines turn negative overnight. But experienced investors understand that volatility is part of the silver market's personality. In fact, Tiggre recently argued that corrections and consolidations may actually be healthier for the long-term bull market than sudden blow-off tops. A slow, steady rise supported by strong fundamentals can create a stronger foundation for future gains. Still, if a true financial crisis emerges, markets may stop behaving normally. During periods of panic, capital can move rapidly into safe haven assets. If confidence in paper currencies weakens globally, silver could experience price movements far beyond traditional forecasts. That does not automatically mean $10,000 silver is guaranteed. But it does explain why some analysts believe the upside potential may be far larger than most people currently imagine. One of the biggest questions investors are asking right now is whether the world is approaching a major currency reset. This idea sounds extreme, but many economists believe the current financial system is under enormous pressure. Governments continue borrowing massive amounts of money, while central banks struggle to control inflation without damaging economic growth. The United States alone carries enormous national debt, and interest payments on that debt keep rising every year. Many other countries face similar problems. If rates stay high, debt becomes harder to manage. But if central banks cut rates too aggressively and print more money, inflation could accelerate again. This creates a difficult trap for policymakers. Precious metals investors believe silver could become one of the biggest beneficiaries of this situation. Historically, gold and silver perform well during periods of monetary uncertainty. When people lose confidence in currencies, they often move toward hard assets. Gold has traditionally been the primary safe haven, but silver tends to attract more speculative attention because it is cheaper and more volatile. This is one reason silver often experiences explosive rallies late in precious metals cycles. Once momentum begins, retail investors rush into the market quickly. Fear of missing out grows. Media coverage increases. And because the silver market is relatively small, prices can move much faster than many investors expect. But there is another important detail many people overlook. Silver is still far below its inflation-adjusted highs from previous decades. Lobo Tiggre recently pointed out that silver would need to rise several times higher just to match historical highs adjusted for inflation. That alone makes many long-term investors believe silver remains undervalued compared to other assets. Some analysts also believe silver mining stocks could eventually deliver massive gains if silver prices continue rising. Mining companies often experience leverage to the underlying metal price. If silver prices double while mining costs remain relatively stable, profits can increase dramatically. However, mining stocks also carry serious risks, including political instability, operational problems, and management failures. Tiggre himself has stressed the importance of focusing on quality companies that are already profitable. He warned that if a silver company cannot make money during strong silver prices, something may be wrong with the business itself. At the same time, many investors continue preferring physical silver over mining stocks because they see physical metal as direct financial insurance. Coins and bars do not depend on management teams, governments, or stock exchanges. They are tangible assets outside the traditional financial system. This growing interest in physical ownership has already created supply pressure at different moments over the last few years. During periods of high demand, premiums on silver products sometimes surged far above spot prices. That disconnect raised concerns about how much physical silver is truly available in the market. Another reason silver bulls remain optimistic is the possibility of a larger commodity supercycle. Some analysts believe the world may be entering a multi-year period where commodities outperform traditional financial assets. Rising infrastructure spending, energy transitions, geopolitical tensions, and supply shortages could all support higher commodity prices across the board. If that happens, silver may benefit not only from financial fear but also from broad commodity strength. Still, investors must remain realistic. Markets rarely move exactly the way people expect. There will be corrections. There will be fear. There will be headlines claiming the bull market is over. But long-term investors focus on fundamentals, not daily noise. And right now, many of those fundamentals appear increasingly supportive for silver. The combination of rising industrial demand, currency concerns, debt expansion, supply shortages, and investor interest is creating a setup unlike anything seen in decades. Whether silver eventually reaches $100, $500, or something far more dramatic, one thing is becoming clear. the silver market may be entering one of the most important chapters in its history. The idea of silver reaching $10,000 sounds impossible to many people today, just like previous major price moves once sounded impossible in the past. But extreme financial conditions can create extreme market outcomes. That does not mean every bold prediction will come true, but it does mean investors should pay attention to the bigger trends developing beneath the surface. Lobo Tiggre is not simply talking about silver as a shiny metal. He is talking about a changing global system where debt, inflation, currency weakness, and supply shortages may collide in ways that force investors to rethink what real money actually is. Right now, silver sits at the center of two powerful stories. The first is industrial demand. The world needs silver for technology, electrification, AI infrastructure, renewable energy, and defense systems. The second is monetary demand. Investors increasingly want protection from inflation, financial instability, and declining trust in fiat currencies. If both trends continue strengthening at the same time, silver could enter a historic bull market that surprises nearly everyone. But smart investors also understand the risks. Silver is one of the most volatile assets in the world. Prices can rise quickly, but they can also fall sharply. Emotional decisions often lead to costly mistakes. Chasing hype during rallies and panic selling during corrections is one of the fastest ways investors lose money in precious metals markets. That is why patience, discipline, and proper research matter so much. Many experienced investors slowly build positions over time instead of trying to perfectly time the market. Others focus on diversification so they are not completely dependent on one asset. Some prefer physical silver, while others focus on mining companies or ETFs. Every strategy carries different risks and rewards. What matters most is understanding why you own silver in the first place. For some people, silver is protection against inflation. For others, it is a long-term investment opportunity tied to industrial growth. And for a growing number of investors, silver represents a form of financial independence outside the traditional banking system. No matter where silver goes next, it is becoming harder for the world to ignore this market. The supply-demand pressures are real. The debt problems are real. Inflation concerns are real. And the global economy appears more unstable than it has in many years. Could silver truly reach extraordinary prices one day? Nobody knows for certain. But history has shown that when trust in financial systems weakens, hard assets often move far beyond what most people once thought possible. And that is exactly why silver continues attracting attention from investors around the world. If you enjoyed this deep dive into the future of silver, make sure to subscribe to Pulse of Silver and stay connected for more market updates, breaking news, and expert analysis on where the silver market may be heading next. This content is made for educational and informational purposes only. Nothing in this video should be considered financial advice, investment advice, or a recommendation to buy or sell any asset. Silver and precious metals markets are highly volatile and involve risk. Always do your own research and speak with a qualified financial advisor before making any investment decisions. Past performance does not guarantee future results.